Hello and welcome to today's video. It is Christmas Eve here, I should say, in Australia. And I went early this morning to the fish markets to go to get some fish for Christmas Day for the kids, and just been at home with the family enjoying ourselves. There's been a little bit of price movement down with Bitcoin going down a little bit. ETH dropping below $600, and BTC around the 21,000 mark, which is to be expected. Nothing to be worried about, nothing to be concerned about, but it is what it is all the same. The title of today's video is the 7 misconceptions about BTC or Bitcoin, and they're going to be completely dispelled. So there's a lot of people that have different misconceptions about how it works, about who the founder is, and can it be hacked or taken from you. And I'm going to be going through all 7 of those and completely dispelling them. Before we jump into the video, I want to just take a moment and share a little bit of insight from one of our sponsors. Okay, before we start the video, I want to just talk about one of our sponsors, Max Wright. He's actually putting together a webinar training which is going to teach you how to invest $5,000 wisely today that can give you a passive income of $100,000 per year or more in as little as 18 months. So this is an invitation-only webinar that he will be sharing all of this info with you. I'll put a link to the webinar underneath this video, as well as it's go.doubleclick.com/Max Wright. Max has been calling different Bitcoin cycles for the last 6 or 7 years. I've personally known him for about 13 years now, since I was about 20 years old. I'm 33 now, and he's a solid guy. He's super knowledgeable. He's got great insights into the cryptocurrency market, and he's really in this for the long term. He's also a great person to find different ways to make money both online and offline. So I'd strongly recommend sign up to this webinar, take the time, watch it. You will get massive amounts of value from Max. And for those of you who've been watching some of the videos previously, you would have seen his insights into BTC and why he feels like this is going to be at least $100,000 BTC in the next 12 to 18 months. So go ahead, register now, and let me know in the comments what you thought of the webinar. Okay, so I'm going to jump into the computer now and run over the 7 misconceptions about BTC. Bitcoin myths. The 10 common misconceptions debunked. Cryptocurrencies aren't a new thing. They've been in the market for over a decade now, and its introduction saw them to join the ranks of fiat currencies as a viable means of payment. But despite all the benefits that cryptocurrencies offer against government-printed currencies, not many people are willing to try them. Why, you may ask? Well, there's not a single answer to this question. One of the reasons might be the wrong beliefs around cryptocurrencies and their underlying technology, which is blockchain. A recent study shows that more than 60% of internet users are currently familiar with cryptocurrency, and since familiarity breeds contempt, a lot of familiarities and not enough information has bred some misconceptions about cryptocurrency. For that reason, I've taken the time to debunk the most common myths and misconceptions about Bitcoin and other cryptocurrencies. So let's jump in. So number 1, Bitcoin replaces fiat money. There was a time when TV was to kill the radio star. The US dollar was once anticipated to replace gold, and now cryptocurrencies are said to be the replacement for fiat money. Don't get me the wrong way, we're all in this and we hope that this happens, but the truth is that fiat currencies are not going away anytime soon. Nowadays, paying with cryptocurrencies is a truly seamless experience. You can either load them onto a global cryptocurrency card or cash out directly to a regular bank card. However, many people around the world continue to rely on traditional paper money. For example, Brazil is a great example of this, as they have a very strong cash dependency. Only last year, Brazil's central bank published a report that reveals nearly half of the country's workforce continues to get paid in cash. And that isn't all. An additional research by the Brazilian Service to Support Micro and Small Enterprise outlined that 60% of local businesses don't even have point-of-sale terminals to enable card payments. Number 2 is Bitcoin is anonymous. Bitcoin is often described as anonymous as it's possible to move funds without providing any personal information, but that's not entirely true. In fact, you should think of Bitcoin as a pseudo-anonymous. Instead, each transaction is registered on the blockchain under a wallet address, and if that address is ever linked to your real identity, then you're exposed. Moreover, There are sophisticated instruments that are used by governments and financial entities to track identities and to provide blockchain forensics for illegal activity. Monero and Zcash, for example, are regarded as the best privacy coins for offering higher anonymity to its token holders. In the case of Monero, transactions are divided into randomized amounts and mixed between stealth addresses, making it impossible to track the real origin. Number 3, Bitcoin has no intrinsic value. The idea that Bitcoin has some huge intrinsic value is just a joke in my view, said Warren Buffett, one of the world's most influential investors. And guess what? He's right. Now, do you think that fiat currencies have intrinsic value? Almost nothing in the world of trading and money has it. The value of fiat money issued by nations largely depends on the support fixed by governments. Bitcoin, unlike the dollar or the euro, has limited supply, which is certainly a point on its side as it can be easily manipulated. Let's stop for a moment and see if Bitcoin and crypto actually fits the attributes of money. Number 1, acceptability. Money needs to be accepted by most people, and thanks to solutions like the Crypto.com card, you can spend cryptocurrencies all around the world. Click the link below this video for more information on the Crypto.com card. Number 2, scarcity. For a currency to have value, it should be limited. There's only 21 million Bitcoins will ever be mined, which means that supply is indeed limited. And of those 21 million, there is presumed to be about 6 or 7 million of those actually in circulation because people have lost them, they're here for the long term, or they're just not selling anytime soon. Number 3 is interchangeability. You can trade crypto against other cryptocurrencies as well as the US dollar, the euro, the British pound, the Australian dollar, and many, many more. Number 4 is transferability. Blockchain technology makes cryptocurrencies the easiest, fastest, and cheapest way to send and receive money internationally. Number 5, durability. Cryptocurrencies are stored on decentralized networks, which guarantees longevity as long as these networks stay active. i.e., if the internet goes offline or the whole of the internet was to die overnight, Bitcoin will die. But that is the only way that it will die. And then finally, diversibility. You can conveniently buy fractions of cryptocurrencies. So, for example, you can buy 0.001 of a Bitcoin. And Bitcoin is a digital commodity as Satoshi envisioned it. And I'll quote, this is from Satoshi Nakamoto, the creator of Bitcoin. As a thought experiment, imagine there was a base metal as scarce as gold, but with the following properties. Boring grey in color, not a good conductor of electricity, not particularly strong, but ductile or easily malleable either, not useful for any practical or ornamental purposes, and one special magic property is it can be transported over a communications channel. If it was somehow acquired any value at all for whatever reason, then anyone wanting to transfer wealth over long distances could buy some, transmit it, and have the recipient sell it. That's a quote from Satoshi Nakamoto in August 2010. Number 4, Bitcoin is untaxable. Although some countries like Liechtenstein and the Netherlands and South Korea don't impose taxes on cryptocurrencies, other nations like Spain have already alerted taxpayers about required contributions to the government arts linked to their crypto activities. Taxation on cryptocurrencies varies depending on how countries perceive digital assets. For example, in the United Kingdom, United States, and Australia, it is taxed as a capital gain. In Germany, on the other hand, the taxation will depend on whether you are buying or selling it. Number 5, Bitcoin is illegal. Back in the 1970s, the Medellin cartel, one of the largest organized drug cartels in history, was making $60 million in drug profits per day. Does it make the dollar an illegal currency? The fact that criminals used a certain currency doesn't make it illegal. It is true that cryptocurrency is highly associated with illegal transactions. For example, a study carried out in Australia showed that 46% of Bitcoin transactions were involved in unlawful activities, but this doesn't mean that it was solely used for illegal dealings. Any other currency can also be used for illegal transactions. Number 6, Bitcoin is blockchain. Okay, let's not put everything in one bag. Bitcoin is a cryptocurrency, and just like any other crypto, runs on the blockchain. Blockchain is not the same thing as Bitcoin. Blockchain is a distributed ledger technology that is used in many different industries, not just finance. In plain English, if we were to assume that Bitcoin is a train, then in this case, blockchain will be the train tracks. As mentioned above, blockchain allows information to be stored in decentralized databases. Cryptocurrency is a reward that the blockchain offers miners for developing the network. To date, there is more than 6,000 cryptocurrency coins, and there is a blockchain behind each and every one of them. That said, we can conclude that blockchain can exist in other contexts than crypto, however, crypto cannot exist out of blockchain. Number 7, Bitcoin is a bubble. We get it. When you see an asset fall in value by half in a few days or even more, a bubble is the first thing that comes to mind, but bubbles aren't always a bad thing. In fact, when bubbles have the power to boost mass adoption, just like it happened with the .com or the internet bubble back in the 90s, once the bubble bursts, it helps the market to get rid of certain players, especially the ones without strong value propositions. The crypto market has experienced a speculative bubble, but it also has been recovering promisingly from the so-called crypto winter, and as you've seen from other videos of mine recently, we are officially in a bull run coming into 2021. Number 8. Bitcoin is for criminals. Sorry, but that's just not even close to the truth. The fact is that criminals have been using the US dollar and other fiat currencies for a very, very long time. And believe it or not, they still prefer paper bills over digital money, because after all, there is no traces with paper. A recent report by the United Nations Office of Drug and Crime, the UNODC, showed that most money launderers still heavily rely on the good old USD. Don't believe me? We'll look at the chart on the screen now, and according to it, for every single $1 spent in BTC on the dark web, a whopping $800 USD is laundered. Number 9. Bitcoin is for the tech savvy. Bitcoin, blockchain, wallet addresses, hash rates, halving. Overwhelmed yet? Off the record, you should be. Seriously, getting started in the world of digital money can be challenging. However, solutions like Crypto.com are lowering the entry barriers. The fact that nowadays you don't need to be a blockchain engineer to use cryptocurrencies, the Crypto.com wallet is an all-in-one solution that lets you handle your digital finances from a single application. You can store, send, receive, buy, cash out, exchange, and spend digital assets with the same ease as cash. Number 10. Bitcoin isn't eco-friendly. Fair enough, Bitcoin does consume plenty of energy. To this date, Bitcoin consumes the equivalent of about 4 or 5 European countries on a single day. But do you really think it consumes more than the infrastructure behind fiat currencies? Yeah, that's what I thought. From the machine that prints the dollars to the security guard of the central bank to the amount of energy required to maintain a paper currency is without a doubt higher than Bitcoin's energy bill. I hope this has been super informative and it's given you a little bit of an understanding of some of the misconceptions so that when people are talking to you about Bitcoin and you're sharing it with them and they say one of these things, you can at least give them an informed answer. Okay, so I hope you enjoyed this video. I hope you got a lot out of the 7 misconceptions about BTC. As you can see, there's a lot of misconceptions that people have, and it's quite simple how it all works and everything that people get concerned about or get confused about. If you are getting people kind of throwing these objections at you, hopefully this video has made it a bit easier for you to understand and really get involved in the BTC and cryptocurrency market. That's it from me. Merry Christmas to you and your family. Tomorrow's going to be a really short and sweet video. It's just going to be a little bit of a Merry Christmas video. So stay tuned for that. And as always, leave a like, subscribe to the channel if you're not already subscribed, and comment below.